NYSE Gap Open Up. Yesterday's big sell-off on the ADP. Tomorrow the big jobs report. Once again, we have a little bit of upside volatility on the pre-market. WPO $29, ESI $18 up, DV up, BPI, CMG once again sold down. We were short that the other day. It's come down. Upside volatility gap against those shorts that didn't get out. So this is the gap up on the NYSE. The gap open down is, on the other hand, is that you don't have a big gap open down. You got limited brands, you got some retailers in here, you got Rio in here, you got JCPenney's. Not a big gap down. The way the trade management will be, it'll be range bound today off the bottom to the high. The upper end of resistance with people covering their short sells as they gap it up would fuel that upside volatility move to a higher resistance level, and then naturally we would be looking for the key reversals at that time. On the other flip side of that trade is that when they pull down and the selling isn't quite there, because there will be a lot of volume today ahead of tomorrow's number, and everyone's already anticipating a bad number. That was part of yesterday's sell down, was to try to pull that news in tomorrow. And what happens is you sell down in the short term 1 or 2 days, you try to price in that bad number before it gets here tomorrow, and then that's when the trade goes the opposite way to the long side. So there is some contrary, and there is some mechanics, and there is some things involved. So NYSE gap open up, gap open down. Trade management will be discussed further as we move throughout the day, so that new MMTs and seniors can understand what today's range truly will be. Now, if we break any key levels at support, then naturally there'll be a sell down to that next lower area. What we'll be looking for is that once it takes to the left side, which is the downside of the market, the left side of a trend, is that if they're longer in depth, and then when they do bounce, that the bounce is diminishing or contraction, meaning that you bounce 70 cents instead of $2.50, and then they roll back over. That's what we call a long left shoulder of the market. We had that yesterday. So once again, volatility is here to stay. The mechanics of the volatility, we'll be talking more about it, and how your trade management works today.